Uh, First of all, thank you for that picture because you've truncated my head, which is much larger normally than it currently looks like there. So I appreciate that. I'm Tobe. As Jeff had said, I was ex-Bain London, and my tiny claim to fame is that I went through 7 rounds of interview with no feedback points. But that's because I think I obsessively focused on every single detail. And I think the reason why you'd want to work with me, apart from the fact that I'm good fun, is the fact that I sort of break down the case into its real anatomy and then try and make sure that you're fit on every muscle and then put it all back together a few more times. And I think that's one part of it. But then the other part of it is also the psychological element. It's a huge part of it. And I think that I'm pretty good in trying to get into people's heads to make sure that they feel like it's going to happen because you're more likely to succeed that way. So yeah, that's Tobe.
Brilliant. I love it. Okay. Thanks, Tope. Great pitch. And we'll have links to where folks can go to learn more about you and to book on your calendar. So appreciate you being here with us today. All right, the last guest for me to introduce is with us here today. Zawad, tell us where you're calling in from and then give us 30 seconds on who you are and why you're here.
Yeah, so my name is Zawwad. I am from Montreal, Canada. So originally I'm a pharmacist, PhD in molecular and cell biology, interested in consulting. So I'm here just to challenge myself, even though my casing skills are a little bit rusty, but I think it's a good opportunity to do it in front of everyone and challenge myself so that I'm interview ready when the time comes.
Beautiful. I love it. Well, thank you for coming here today and putting on a show for the world. Excited for the case. Thanks for being here. Okay, well, now's the time of the session where I turn it over to Bayans and Zawad to run into the case. And so what you're gonna see, watch, experience today is a Bain like case interview demonstration. So this is something you could expect to get if you interview at the firm. And so this is a great chance for free case practice. So highly encourage you to grab a pencil and a paper. Quickly take 30 seconds to do that and to follow along to the case. You'll get way more out of the session if you're actively practicing alongside these two. Awesome. I'll be in the chat answering questions. Please send me a DM, send a message to the group. I will answer your questions as best as I can, and we'll take some time at the end for to answer some of your questions live. All right, Tobe, the floor is yours.
Awesome. Japhet, just before you go, just one quick question. I know there are two formats. Just wanted to find out which one was the preference. Should I give feedback after each activity, or should I wait till the end and then do the whole thing at the end?
Why don't we wait till the end and do it all at once?
Okay, all good.
Perfect.
Awesome. Good. So I'm going to assume it's okay to start. Fantastic. Awesome. Okay. So always like to use the first few minutes, and I'll be very brief, to just sort of run through what it is Zawad and I are going to do today. Am I pronouncing it right? Is it Zawad or Zawad?
It's Zawad.
Zawad. Zawad.
Zawad.
Thanks. Zawad. Good. So I'm going to quickly run through it, and essentially, you might hear me type in while this case is going on because I'm taking feedback, which is very normal. In real life, someone will just be writing with a pen in front of you. But we're sort of breaking the case down into 5 different elements. But if we look at the case as a whole, there are 3 movements of the case, right? Kind of like 3 movements in a piece of music. So movement 1 is the intro. And there are 3 sections there. So one is the case recap. So making sure you recap the case, summarize it, anchor it, if possible, reference something in real life that you know about it, to make sure that you sound enthusiastic, and then also nailing the business problem. So that's crystallizing, absolutely making crystal clear that you've clarified what the main business problem is before you go. So can't move the case forward until you do that. So that's case recap. And there's a score for each section, by the way. So that's case recap. Then you get to clarifying questions. And here you want to really ask 3, maybe max 4, definitely max 4 questions. So 2 to 4 questions, essentially, that helps scope the case. And the way I like to think about this is it's actually very real life scenario, because you could be in the kitchen next to the water cooler. The manager has gotten the case. They haven't gotten the entire brief. They haven't scoped out everything, but they've sort of gotten enough of just sort of high level summary of the case. And you're sort of asking them, okay, what's this going to look like? What's the distribution? What's the geographic spread? You can't ask them what the profit is because they don't know. Like, we've not seen the client's books, so it would be unrealistic to do that. So you're kind of simulating an actual real life scenario where the manager knows what's happening, but it's very high level. But then you're trying to get ahead of the case to basically figure out what it is you should start focusing on. And then you have the case structure, which is the framework. So standard framework, you've got 3, 4 buckets, maybe 5 max, and you've got drivers under that. So that's the first movement of the case, and there's a score for each of these sections. Then second movement is activities. Here you've got a mix of brainstorms, you've got a mix of case insights, and you've got a mix of case math and insights. And I say case math and insight because you can't pass the case maths without talking about the insights from the maths as well. So it's kind of, they go, hand in hand. And that's the activities. And it could be any kind of permutation of this. So you could have 3 brainstorms and 2 case maths and insights. You could have 1 case math, 3 case insights, and then 1 case maths and insights. Doesn't really matter. They can mix it up around. That's the second movement. And then third is a crescendo. It's the case recommendation. So basically how you finally recommend the case, the prompt, the recommendation, supporting data, making sure you have some quantitative data as well, in addition to qualitative, and then the 2 risks, maybe 3, and then next steps as well. So that's the entire case. And then across all of this, you have case leadership, which is basically another segment where they're judging you based on, or grading you, not judging, based on how collaborative you are, how assertive you are. And assertive there just means, are you driving the case forward? Are you always trying to think of what's next? How excited you seem, how professional you come across, and if you have executive presence. So that's all of those would get scores essentially. Good. So that's the anatomy of a case. Now let's actually go on and do one. And if you interview with Bain, you will 100% get an M&A case because Bain is very pro M&A and pro private equity. So it's definitely going to happen. And this is a lengthier one for sure. So Zawwad, I'm sorry, but I went for a bazooka just so that everyone could see what that looks like. But it's not crazy hard, but it is a little bit more complex. We might not finish it. We probably won't finish it, but it would be good to just get as far as possible. And then we can go into the feedback. You ready?
Yes, I think.
Oh, good. Okay. So today, your client is a company called All Licorice, and it is a candy company in the UK. Now, the candy industry in the UK more broadly includes chocolate, chewing gum, and licorice. So those are the 3 main product segments. Now, over the last several years, there's been consolidation in the market, which has led to there being only 4 massive players. Now, your client, All Licorice, is the only player in the market who serves licorice. Black Delights is the second player. Yes, the names are quite funny. Black Delight is the second player, and they only sell chocolate.
Mhm.
Chewin is the third player, and they only sell gum, chewing gum. And then finally, you've got Devotion, which is the largest of the 4, and they sell a variety of candies, and they're considered the only diversified player. So they do licorice, chocolate, chewing gum, the entire lot. Now, recently, the board of directors for All Licorice has proposed an acquisition of Black Delight, the chocolate maker. Now, your job today is to advise the board on whether to pursue Black Delight as an acquisition target, and if they do, what price should they go in at?
Okay, so quickly, just going through the information that I got for the problem today. Our client today is Licorice. It's a candy company in UK. and they are working in the candy industry. Candy industry is pretty consolidated industry, and there are only four big players. Licorice is one of them, other being Black Delight, Chewing, and Devotion. The largest of all is Devotion, which is very diversified in terms of the products that they have in the candy market. Whereas our client Licorice is more into the licorice product kind. And the board of director, they are really interested into buying another player, which is Black Delight, that operates in the chocolates only. And they are looking for us to help them to decide whether they should go for this acquisition or not, and if so, what price valuation should they do? Is
Yeah,
that everything I got correct?
yeah, spot on.
Great. So I would just quickly to better understand like the problem here and the understand like where the board of directors are coming from. So I'm just wondering, are there any kind of like in terms of upfront investment or in terms of break-even point that they are looking at like in the future, like how many years, so that we can keep this in mind that could affect the acquisition of the decision of the acquisition, in fact.
So I guess in terms of financial hurdles, it, uh, we don't, or the board better still doesn't have any specific internal targets per se, but they are very adamant that they must not overpay for the assets. So whatever you do cannot overpay for the asset. But they do recognize that there could be synergies brought to the table. So they're
Mhm.
willing to consider potential price options that might incorporate those synergies,
Mhm.
uh, as long as it's good justification for that.
Okay, good to know that. And also wondering, like the objective behind the acquisition is diversification of their own portfolio, or they are looking, and also like if they are looking in, if that is the only objective, are they looking into the other companies as well, or just the Black Delight is the only target for now?
Good question. So only Black Delights for now. They've done some preliminary work already on that company.
Mhm.
And yes, the main goal is diversification of product portfolio.
Okay. Um, just one last question, just to understand the industry better. We know that there are like four major players, but in terms of the chocolate segment, is Black Delight is one of the biggest player, or there are other players also, like in only this subclassification?
So there are other players, but Black Delight is by far the biggest one.
Okay, perfect. Okay, perfect. So I think I have all the information just to go about, and I would take a few moments just to organize my thoughts. Would that be okay?
Yeah, absolutely. It's fine.
Thanks. Okay. So I have like structure in place just to help our client today, how we can go forward with their decision making of the acquisition of Black Delight. So just right off the bat, I would like to make a very initial hypothesis of for our client is that it seems like a good acquisition, but as we unfold more data, we'll see like if a revision to this hypothesis is needed or not. So I would say that it's a good acquisition in terms of as long as the objective is concerned, the diversification of their portfolio. But in order to look into details and deep dive, I would like to look into the financials of the Black Delight at the one segment. In the other segment, I would like to look into the market of the chocolate in UK itself. And then third, I would look into the synergies of our client with Black Delight. And finally, I would like to look into some other areas to explore and to further validate the risks and next steps. So first of all, for financials, I would like to look into number one, the revenues for the Black Delight, historically how they are being doing, what is their annual revenue, and what are their products that they're offering to in the market, and how they are being priced. I would like to see if they are fairly benchmarked against the industry standards, and how much is the volume in terms of that. So based on this information, we can calculate like how much is the annual revenue in the recent past and also in the previous years. And then I would also like to look into the cost of the it's associated with the Black Delight. Like it will show us how profitable the company is. So I would like to look into the fixed and variable costs, including cost of goods sold, their facilities, employees, and tax and interest that they are paying. So that would give me like a gross and a net profitability of the Black Delight. That would help us really to evaluate like what is the fair valuation of the company. And in the second area, I would like to look into the market. So I would like to see how big is the market of the chocolate itself, because that could also show us like how we can take the company after the acquisition, and if the market is growing in the near future, and what percentage is there. We know that the Black Delight is the biggest player in the chocolate market, but we'd like to see like what is the market share and what are the expectations there, and if we can further grab more share once we do the acquisition. And also like to look into the customer preferences, like how they look on the Black Delight. Is it a premium brand? Is it a regular brand? So that would also help us to understand the market overall. In terms of synergies, I would like to see, because our chocolate would be a new product in our portfolio, so we'd like to see how we can the acquisition of the chocolate giant in terms of like the chocolate segment, how we can synergize it with our own company. What are our capabilities that we can leverage upon to moving forward to increase the profitability after the acquisition. And finally, in the other areas, I would like to see if there are some other previous acquisitions and mergers that have done like in the recent past that would we can just use them as a case study to see to evaluate our target. And finally, yeah, so I think that would be the overall structure that I would like to go into. But I would like to start with the financials of Black Delight, like how they are doing in the previous years. So it would really helpful. And if you think that it's a reasonable approach, we can go ahead and see if we have any information about the revenue.
Okay, I think that's very reasonable. Just very quickly, maybe just a few seconds here. If you had an extra 2 weeks on this project, what other bucket would you like to explore, and what drivers under this bucket would you like to explore as well?
An extra, I mean, I would like to see, for example, I mean, for now, we know that the client has done some kind of an initial due diligence in terms of potential targets. So if we have like a couple more weeks, maybe we can look into the market if there are other companies or the potential targets that we have in the market that we can target in terms of the acquisition, because the objective here is to diversify our portfolio. So I would like to see why Black Delight is the top target for the client, and if it's a reasonable target.
Okay, I think that's reasonable. Let's move on. So just off the bat, what are some of the key concerns you might have before we even begin with the analysis? What are some key risks that you foresee?
I think the first and foremost would be the company capability for our client itself, because this will be a new area, although it's very relevant with the candy market. But chocolate is a very special and very I would say, kind of a difficult domain for someone who has not done it before. So maybe in order to see like if our client has the capabilities to tap into the chocolate market and really can synergize and integrate the new company into itself. So I think that would be one of the risks that I would really look into.
Okay. What else?
Other than that, I would like to see, like for example, why this Black Delight company itself is up to is they are ready for the acquisition. Just want to see if there is any red flags there, if they are seeing any decrease in the revenue or the profitability. I think that would also be a risk for us. Like if the company is not doing well, maybe we will not be able to recoup our investment that we do.
Okay. Okay. I think that's sensible. So, how would you approach valuing Black Delights, and just walk me through all the different ways you'd think of approaching that valuation
Mhm.
exercise?
Yeah. So I think the valuation is for in general, like we first need to see like what is the uh, any company that we want to evaluate. I would like to first see what are the debts on the company, what is the equity that they have, and then what is the cash value. And based on this, we'll see like what is the actual value, and then in terms of the revenue, like what revenue they are making and how profitable is that in terms of like as I mentioned already, like we would like to see on the revenue and the cost, because that would give us an indication if the company is doing well in terms of profitability. And then based on the gross and net profit that they are making, we will see like what multiplier of their revenue that we can use in order to evaluate the company. That is essentially like the value that we pay per dollar of the revenue that the company is generating. So I think first of all and first and foremost would be to see the revenue of the company, and then see if they have any debt on that, and any liabilities associated with the company, and that would give us kind of we can go to a number there that we can use as a multiplier for their revenue to see like what is the reasonable valuation of the company.
Okay, I think that's sensible. So you've basically spoken about a multiples valuation. So getting some kind of metric, whether it's revenue or EBITDA, or operating profit or whatever, and then multiplying that by a multiple. Where would we get that multiple from? Where would we go to find that multiple, suitable multiple?
Yeah, I think that's that's where I think the recent acquisition in the similar industry that has happened might help us, because we can see in terms of similar profiles of the companies that are being acquired recently, that would give us an indication like what is the market itself in terms of the multiplier of their EBIT or EBITDA. So I think that would be one area to explore, that we can see other case studies about the acquisitions recently.
Okay, I think that's very sensible, and that's very extrinsic. That's sort of looking at the
Yeah.
market, saying, okay, here's our own metric, whether it's EBITDA, revenue, or whatever. Here's what the
Mhm.
market is trading at, or past transactions have traded at. We could probably fetch that valuation. What about if you wanted to look more intrinsically? How would you go about valuing the company if you were looking more intrinsically?
I think more intrinsically, it would be I would say like really the net profit that the company is making. Because if the company is good at revenue, but the cost is really high, and they're for example in the chocolate there is not following the lean production processes, for example, there is a high cost associated with that, and the operating margin is very low. That would decrease the valuation of the company, because then obviously they are not making a lot of profit, so that would decrease the valuation in terms of. But again, like I think that is one of the intrinsic factor that we can consider in terms of valuation, and that would help us also profiling of the company with the other similar companies who have the same operating margins, and what multipliers that was used for them to evaluate them. Would that
Okay,
make sense?
yeah, makes sense. Okay, let's move on. So let's start by identifying a standalone value for Black Delight. Now,
Mhm.
unfortunately, we don't have a set of cash flow projections, which would have been very helpful because we could have done a
Mhm.
discounted cash flow valuation. But we do have Black Delight's financial statements in addition to a set of precedent transactions.
Mhm.
And so that's recent market transactions.
Mhm.
And also public trading comparables as well. So we've got
Mhm.
some public trading comps, got some precedent transactions. Now, I'm going to, or you have been, I've shared with you already some exhibits. I'm going to
Mhm.
flash them up so that everyone in the case can see them. Or you can go from that, or you can go from your email because I know you have them in your inbox as well. So I'm going to start with exhibit one. Now, what I would like you to do is comment on each of the exhibits and then move from that to collating everything together to give it an approach to how you're going to value the company and the insight you've drawn out from that as well. Make sense?
Mhm. Yeah.
Good. So I'm going to flash exhibit one and Japheth and everybody else, please let me know if you can see it. Can everyone see my screen? Fantastic. Awesome. So these are Black Delight's financial statements.
Mhm. Yeah. So the exhibit one, just I would. So this one is basically telling us not only the last 12 months, but since 2021, how the company is doing in terms on their financial statements. So
Good.
in terms of revenue, we can see that there is in general there is an upward trend. Specifically in the last 12 months, it's gone from 7,000 to 7,900 million pounds.
Mhm.
It also tells us the gross margin by subtracting the cost of goods sold. We can see that the margin is also going upward with the revenue, which shows that the company is doing fairly well on that end. When we look at the EBIT, we can see that also everything is the over the year over year is going up except for 2022. I don't know, maybe we can associate that with the COVID, maybe that we see like a little bit of downtrend there, but then it kind of bounced back in 2023, and in last 12 months it's also fairly good, 1.8 billion pounds. And then if we look into the added EBI EBITDA, we can see also an upward trend. So in summary, we can see that the Black Delight's financial statements look healthy. We can see that there is the revenue is going up, gross margins are going up, and also the earnings before interest and taxes are in positive at least, and also with an upward trend. But
Okay.
obviously, we need to see if they are how they are doing in terms of comparables with the other companies, so we can see that also.
Okay. Good. Now I'm
Mhm.
going to flash up exhibit two. Let me know when you can see it.
Yeah, I can see it. So so here we can see that it's basically this exhibit tells us about the precedent, like the previous transactions in the candy market. So we have like several other layers which are pretty recent, starting from 2020 to October 2023. So we can see that the value of the enterprise that was that they were valued, and then what were their revenues at the time of acquisition, what is the revenue multiplier, and then the EBITDA and EBITDA multiplier. So I think the key takeaway here is to see it can give us an idea of the multiplier that we were talking earlier about, the revenue multiplier. So how we can use the revenue insight to evaluate a company. So we can see that Devotion Candy was actually not Devotion Candy, actually Devotion, yeah, Candy Code 2, which is the last one. It was valued at 1.6 times of their revenue. And interestingly, we can see that Black Delight has a fairly low revenue multiplier with 0.6 times of their revenue,
So
which
just in terms of nomenclature, what that means is on the first column is the acquirer, and the slash, the name after the slash is the company being acquired, and that's the multiple to which it relates to.
Okay. Okay. Yeah. Okay. That's good to know. So the fourth one then in that case is Chocolate Cove, which was
Yeah,
acquired by Black Delight. So they have
yeah.
the lowest revenue multiplier 1.6, and Candy Code 2 had the highest 1.6. We can see that in terms of now we can see also the association or correlation of the revenue multiplier with the EBITDA and EBITDA multiple. So we can see that if for the Candy Code 2, um, just quickly analyzing that. So we can see the earning before interest and tax is highest for Gumco, um, and they are lowest for the Chocolate Co. So yeah, so the valuation is the revenue multiplier is fairly going is associated with how well they are doing in terms of their earning before interest and tax. So I think the key takeaway from this exhibit is uh, to look into the previous transactions and get an idea how we can evaluate our target for the acquisition.
You have two multiples there. You've got revenue multiple and you've got the EBITDA multiple.
Mhm.
If you had to choose just one of them to use, which one would you choose?
Um, okay, that's a good question. I think I think well as I can see here, like both of them are correlate to each other. Like when EBITDA multiple is high, revenue multiplier is also higher. I think the revenue multiplier would be a good indication to choose in order to evaluate the company.
Why?
Because that is number one is fairly simple because this tells us how much dollars we are paying or maybe pounds we are paying per pound of revenue. So for example, this Chocolate Co, we are paying zero point 0.6 dollars pounds per pounds of the revenue, which means that this company was acquired at a very discounted price. So it gives us a very straight away indication of how much money we are giving in terms of what we are getting.
But
So
then I could turn around to you and say, well, if you use the EBITDA multiple, you also know how much you're paying per pound of EBITDA. So why revenue as opposed to EBITDA? Because they both do the same thing. It's the multiples.
yeah, that's true actually. Um, I think okay. I will revise my understanding on that. So I think EBITDA would be a better metric to use because this is a um, well, that's tricky. So I think EBITDA would count. It is also an earning before interest, taxes, amortization, and depreciation, right? So, but it's not counting the other costs. But well, revenue is also not costing. So I think EBITDA would also be a good indicator. So let's go with EBITDA then.
Let's go with EBITDA. Okay, good. I'm going to show you the last exhibit, and then
Mhm.
after that, we have to speed it up a little bit.
Mhm.
We are close. So let me know when you can see it.
Yeah, I can see it.
Good.
Okay, so here these two are the public trading companies, right? So on the Tune and Devotion. That okay. Um, so would you mind if I take a just quick moment, like just to like
Absolutely.
orient myself? What are the information there? Okay, so the two companies, Chain and Devotion, are compared here, and they're and different like metrics related to these two companies. So we can see that the market cap for Devotion is 300,000. There is 150,000 debt, 450 well 450,000 million, like $450 billion of enterprise value, 250,000 revenue. EBIT is 75. Okay. Um, I'm just so this is basically another kind of metric to look into the company performance in terms of trading multiples instead of revenue or EBITDA. So I can see the revenue is 2.2 times of their trading multiples.
I guess maybe to narrow it down, what are two things you find the most interesting, and what could you take away from this to plug into your objective, which objective is calculating valuation?
Mhm. I think the most important would be the net income of the two companies,
Hmm.
right? So these two companies have their net income, but 11,525,000, and then it shows like what is the trading multiple based on the net income. So it is 21.7 times of their net income is
Hmm.
the trading multiple, and that would be essentially the valuation of the company, right?
Yeah.
If
Okay.
yeah, so that would give us an indication like if we do the comparison of our target.
Okay. Good. Very good. Good. Let's move on. So now that we've dived into the exhibits, what is the valuation of the company?
Hmm. Okay, so I mean I didn't I don't have the calculations there, but um, if we have like you want me to do like the maths to do the evaluation, get to a number?
Yes.
Yeah. Okay. Um, so I would. So can I go back to the exhibits just to get the information from there? Because then I would need the financial statement of the Black Delight.
Absolutely. Would you want to use that or take that from your email, from your
Yeah, sure.
inbox?
I would take that. Yeah.
No worries.
Okay. Yeah, I have it in front of me. So now, looking at the Black Delight's financial statements, I think we can look into the bottommost where it is showing us the EBITDA for the Black Delights. It's $2.6 billion. So what my approach would be to um, so so in order to see, so because we need to use a multiplier for that. Um, So in the last 12 months, we can see the Black Delights is having an EBITDA of 2.6 billion. So we can, based on the previous transactions that we look into in the similar in the candy market, we can see that the EBITDA multiplier was on average the 10 times of the EBITDA itself. So maybe we can just take the multiply the EBITDA of last 12 months with like 10 to get a valuation of the company. Would that be the right approach, or
I think you're onto
the simplicity?
something there and very close.
Mhm,
But because you have a basket of different comparables,
mhm,
might it be a little bit more, just a tad bit more scientific if maybe you took an average of that basket?
mhm. Okay, so I think in that case, then we will see like which company in the previous transactions were the closest to our target, and
Hmm.
see what was their valuation, and we will use that numbers to do our valuations, right?
Yes, I assume that every company that was acquired kind of has a profile similar to Black Delight. Like
Mhm,
they can all pass,
mhm. Okay, so if I understood well, that we are saying that all the previous transactions that we are seeing right now, like
are
all
quite
the
similar.
companies that they are quite similar.
Hmm.
Okay, so then in that sense, what we can do is we can so we can normalize the EBITDA multiplier with their with the mm, okay, that's a multiple in terms of the valuation. Okay, so what is the difference here? Enterprise value. So just give me like few seconds. I want to make like a so I think if all the companies are like of the similar profile, and we want to evaluate our company, we know that we have the EBITDA for our client, and the from the look of it, it seems that the companies who have higher revenue, they have a higher multiplier. Not necessarily. Actually, this one is different. 12.8.
Maybe we go with taking the average. So
Mhm.
you're interested in focusing on the EBITDA multiples, right?
Yeah.
And we know that every company there is in the same basket, like
Mhm.
it's quite comparable. So maybe
Mhm.
we get the average of the multiples and then use that
Mhm.
and
Yeah.
apply it
Yeah.
for our company. Yeah.
Okay. Yes. Yes. So we'll do that. So in terms of the average for the all the EBITDA multiples, we'll add up all the multiples which are 10, 11, 9.5,
Hmm.
um, and 8 and 12.8.
Yep.
So I would add them
Correct.
all and then divide by 5 to get the average.
Yep.
So that would give me 10 plus 11 will be 21. 21 plus 8 will be 29. Plus 12.8, it will be 11, 29, and it's like 41.8, and then we have 9.5. It will be 41 plus 9 is 50, and 51.3. So divided by 5, it will be 5, 1, and then 10.2. So it will be 10.2, the multiple for our client. So now
Yep.
we have the weighted, like not the weighted, but the average of all the EBITDA multiples. So we'll multiply that with our client's EBITDA, which is 2.6 billion, right?
Hmm.
So we'll multiply 2.6 billion by 10.2. That would be, so just quickly, 2.6, six, and 2, 4, 2, 5, 6, 2. So it's 265.2 billion. So the valuation for our client comes out to be 265.2 billion. Just confirming, like just having a second look to see if I think it seems like a good comparable, uh, considering that the one, two, yeah, because it seems but this one is in million. Yeah, so 265.2 billion is the approximate valuation of the client. Does that make sense?
Do we want to check the decimal places again? So
Yes, yes, yeah.
you're almost there, but
Mm.
maybe a decimal place is off.
Yeah, that's true. So it will be 26.5.
Yeah, that's more like it.
Yes, yeah, yeah. So because that's
Good.
why I was making it. Yeah.
Good. Okay. We're rounding up now. So
Mhm.
so what? This we have this number. What
Mhm.
should we do with it?
Yes. So actually, we want to see like if this is a good valuation, and the question was for our client, should they go for the acquisition or not? So we would like to see in terms of previous transactions and also in terms of our client's EBITDA, we can see that it is it seems like a good numbers. Like it seems like a good valuation, 26.5 billion, considering that the EBITDA for our client is 2.6 and it's going upwards. So and uh, and also like it will help our client to diversify their own portfolio. So considering all these uh, factors, I think it would be a good acquisition for our client.
Okay. The board, the chairman of the board has walked in and he would like a final recommendation and wrap up.
Yeah. So our recommendation to our client would be that they should go for this acquisition because the company, we have done our due diligence on the company's financials, and we have also looked into the previous transactions. We see that the previous transactions were done on the 10x of approximately 10x of 10.2x of their company's current EBITDA, and we have seen that the Black Delights have EBITDA of 2.6 billion, so if we do that, we see that 26.5 billion would be a reasonable acquisition value for our Black Delight target, and also the next step would there might be some risks involved, as we discussed already. So would be that because we don't have the expertise in the chocolate market, so maybe the client would face some kind of technical difficulties, and also in terms of synergies and integration of the new company into our own already the structure of our own client company. So the next step would be to do further due diligence in terms of the chocolate market itself, and looking into if the chocolate market is growing, because if the market is growing, then it would keep the same trend that we have seen in the financial statements of the Black Delight. So looking into the market trend in the future would also help us, our client, to make more more solid decisions on that. But in conclusion, it seems like a good acquisition for our client.
Okay, fantastic. And done. Good. Okay, so let me give the feedback. First of all, Zawad, that was fantastic. Like, I know we've sort of ambushed you with the case. So yeah, no, totally well done. Like, very, very, very impressed. Uh so let me go through each of the feedback points by the sections and give a score and explain why he got that score. And then I can see that there are already some questions in the chat, so I'd love to answer as many questions as we can in the time we have. So the first movement, that was fine. He cleared it. So 4/4 on the case recap, on the clarifying questions on the case structure. Why did he get a 4 on the case recap? By the way, the scores are 1 to 4, but sometimes 1 being piss poor and 4 being, the max, almost the maximum, but really good. And sometimes you can get a 5, and a 5 is just essentially a spike. So it's basically you've gone all way over and beyond, right? The trick, and I guess the objective, is that across every single metric, you want to make sure you're not getting anything below a 3, but you're not really going to pass with a 3, because if you scored a 3 on every single thing, and everyone else is scoring a 3.5 or 3.7, then you're going to be dinged. But if you get below a 3 in one particular thing, you will also be dinged. So you don't want to get below a 3, but you want to ideally get some 4s, maybe get some 5/4s as well on spikes. Now, case recap, excellent recap for a very lengthy prompt. Nailed the main business problem, did not move forward until we had the business problem, until we aligned on the business problem. Very important. Clarifying questions, very, very good. Good questions. Always worth asking some staple questions as well. So distribution, geography, business model, secondary goals, and limiting factors. These are usually the 4 or 5 questions you can ask. But you're meant to cap it to just 4. Some of them will be really straightforward. So in this case, we knew the geography. We were told it was in the UK, so there was no need to ask that. It will be kind of redundant. But those are generally the 4 or 5 questions you want to be asking. The case structure, really good. Very important is that do not fear the awkward pauses. You're allowed 2.5 minutes on the case structure. That's the max. After that, you might start getting penalized. And then on the brainstorms, and this is very important, on the brainstorms, because it's something Zawad didn't do, you're allowed 30 to 45 seconds to think and to come up with a structure. So brainstorms are just truncated, targeted case structures. So they're meant to have buckets as well, and they're meant to have drivers under them, which are the ideas. So you try to organize them into buckets, but you're allowed around 30 to 45 seconds. Sometimes you will get rushed, but if you do have the time and if you ask for it, definitely take it. But case structure was really good because he went horizontal first before going vertical. And what that means is he basically spoke about all the buckets that he was going to speak about, gave a very short summary, and then after speaking about all of them, when to then go through the drivers onto those buckets. So that's exactly how you have to do it. So it did that really, really well. The buckets were strong, the drivers were commercial. And then after that, you pushed me by saying, here's where I would like to start first. So that was a perfect movement. Uh, the good news is that he did it really well. The bad news is that no one ever passes a case by scoring a 4 in the first three ones. Like it just doesn't work. So the messy part is the movement two. This is brainstorm. This is case, math and insight. This is insights. This is where people usually screw up. So this is, where the graveyard is essentially. So the scores start to drop dramatically once people get to this section. But he did pretty okay. I think first brainstorm, the recurring problem is that when I asked him questions on a brainstorm, on the case creative questions, he went off the hip without stopping to think. Always take the 30, 45 seconds. After 30 seconds, the person will usually try and drag you back in. But what you're trying to do there is you're trying to put stuff into buckets, and then you're trying to make sure that you can think of more ideas as well. So, always take the time. If you're granted it, definitely take it. Uh, the general theme from this case is that Zawad is a strong candidate, but he probably would have been on the edge, and that's purely because Zawad's knowledge of corporate finance is not sufficient. Now, that is totally fine, and that is 90% of people who come into casing, because if you're not a finance student or if you've not cased and done a lot of M&A cases, you would never know it because it's not, you can't know it randomly from thin air. So you got to practice into it, right? And so some things that he did were good, but some areas were just lacking because there was a bit of a gap there in knowledge. And the gaps in particular were around valuations and things you should do, because that would have sped up his process really well and would have made the case much quicker and allowed him to finish every exercise in the case. So one thing is, when you are doing valuations, if you're not given, the best thing to use is cash flows, like the actual cash flows. In lieu of cash flows, the next best thing is EBITDA, because it's the next best proxy for cash flows. And then in lieu of that, revenue. But it's almost never going to be revenue. And that's because revenue can be totally distorted. People have different revenue policies. People can inflate revenues. So and also revenue is not profit in any shape, way, or form. EBITDA is some type of profit because it's earnings before interest, tax, depreciation, and amortization. And the beauty of it is that I guess it helps you compare across different companies that might have very different depreciation policies, very different investment policies as well, which would totally skew their depreciation, very different financing policies, which would skew the interest. So it sort of gives you an equal level playing field. It's the closest thing you can have to what's the real operating profit of this business when you remove all the distortions. So if you don't have cash flow, the next best thing is EBITDA always, which will then mean that you're looking for the EBITDA multiples. So that would have let you quickly skip through all the thinking and then just going straight for it and made you much quicker. But that just comes with practice, essentially. Uh, I think after that, the math was good, but there was a mistake there. It always happens. The key thing to note is that sometimes even when you do make mistakes in maths, if you've been a really strong candidate, don't fear. It is totally fine. My final Bain interview, I was it was 30-minute case, but we were finishing the case in 15 minutes, and I made a mistake with the maths, and then I started laughing and I was joking with him and I said, everyone, let's just calm down. And everyone just started laughing in the room. So it is totally fine. If you're a strong candidate and you're doing very well, no one's going to ding you if it's not egregious, right? If it's like, oh, he missed out one decimal place, which is sloppy, but it's not the end of the world. If you've totally gone off the rails, then yes, you will get dinged, obviously.